So, is it me, or is it seem like the week is just basically going in rigmarole, up, down, left, right, where we've really done nothing with the markets closing essentially nowhere? We're basically exactly where we were last week. And not only is that going to be the case for this upcoming week, this week we got CPI, Powell, multiple news about tariffs, the most beautiful word in the English dictionary, as one would say, and also with CPI expected to basically come in absolutely nowhere. It's supposed to come in exactly the same way. So how are markets necessarily going to react to this news? As we covered on stream with the bombshell egg prices expected in the CPI, honestly, it's a big nothing burger because 2.9 expectation for CPI really sets up the market's fear to be relieved, right? We talked about this on the stream where we're basically in the same place. It's going to be the general gist of this of tariffs were in the same place because 2 weeks ago we were talking about tariffs. Last week ago we were talking about tariffs. And again, after Donald Trump was elected, we basically have gone nowhere. We've gone a lot, right? We've done a lot in the markets. We've gone up, we've gone down. We've got loop-de-loops. This could be one of the biggest cup and handles forming right here. But is it really working out? Not really. We're still above the 50-day moving average, and the bulls actually didn't do that great this week, but the bears did close their net speculative positions, trimming them back to approximately 5,000 net speculative positions. What does this all mean? Well, it basically means the playing field is pretty even. It's going to be the general gist, like I said, of this entire theme for this week, where both sides really aren't exposed, but they aren't really kind of winning, right? So it's going to be an equal fight between the two as we head into a very, very critical week. Going on, Monday is going to be kind of a nothing burger. Everyone's going to be recovering from the Super Bowl. Throw down the comment section below who you guys are rooting for. Eagles, Chiefs, who's your favorite team? Who you rooting for? Team green, team red, right? Are you rooting for team green on the stock market? Team red on the stock market? Throw it down in the comments section below. I'm really curious to hear what you guys think about that. But let's talk about what's going to be going on in the markets and what's going to be happening this week. We got the beautiful man, myth, the legend himself, Jerome Powell, testifying on a Tuesday and Wednesday. So markets are definitely going to be keen on what he's saying, and a lot of movement can come from Powell. Is he going to reignite that optimism in the markets for Fed rate cuts? Because right now we really don't have a lot of optimism for these Fed rate cuts. And now a lot of banks are only expecting one cut this year. If we go to December, we can clearly see our current rate at 18% chance. 18% of people believe that we're going to be at the exact same spot. Kind of general trend right here going on in the market with that pessimism, as we basically got really good job numbers in the sense of they're not overheated, but they're not that great. But then Michigan expectations for inflation came in way over the top. So the question is, where are we going? And the market is looking for some insight. I'm sure you guys are as well. We're going to be talking about the exact levels that we have to pay attention to in this video for us to have bullish or bearish trades. If you guys want to have a watch list, make sure you guys join the Discord, link down in the description below. The first 17 people that join the Discord will be added to the watch list completely free. Afterwards, it's going to be behind a paywall. So make sure you guys are one of the select few that get that. We threw out some amazing earnings trades. Some of them did bomb, but that's the way of earnings trades. However, all those plays netted profit if you played all of them. I myself played all of them. So again, I'm never going to give you guys a trade that I myself am not going to play. It's just the simple way it is. Up on the year about 8% while the market's kind of doing a bit of nothing. Again, general theme of the story of the world today. And subsequently, with the expectation of rate cuts, we're kind of in this muddy water of one rate cut, two rate cuts, maybe three rate cuts this year, right? 12% is equal to where we currently are at 18. I think this 18 is going to start getting shifted as we get more of these CPI reports. Seeing how oil's been doing, seeing how egg prices and shelter and everything's gonna been doing, right? We talked about shelter with housing inflation not really doing much. The most stagnant November, December peak I have seen in quite some time. It's really, really stagnant where the summer and low highs aren't really moving much. So it could be interesting to see how the dynamic fails into the report and how Jerome Powell always says shelter is falling when it's really not. But again, he's going to be testifying on Tuesday. We're going to have to keep an eye on that. There's no earnings that are major blowout this week. NVIDIA's in a couple weeks with AVGO. So we really got this earnings lull right now where we get the CPI funness, where we get to see CPI. We get to see all of this going on as well. And make sure you guys stay tuned for the channel's live streams that we'll be probably doing on Wednesday to cover the wonderful CPI. currently expected 2.9. CPI regular expected to tick down month over month. That's where we're kind of seeing these reports level out, while core expected to tick up 0.3. Lastly, it didn't tick up last time as we were expecting. So we honestly could get a 3.2, 2.9 number. I could very easily see that as certain things are moving in and out. Again, Powell testifying on that same day. I'm sure he's going to be asked those questions of, what do you think about the CPI report? They're going to be chomping at the bit to ask him about that. And also PPI as well coming out early on, expected to be not the greatest, but still around that flat territory. Continuous jobless claims. And then core retail sales on Friday, which kind of rounds out the week. We're really going to be the hallmark peak on Wednesday. And what is the market essentially going to do? Are we going to get out of the fearful territory that we've been? One of the things I notice is that we've done a lot of nothing. We've gone to no weekly newer lows, right? On Monday, we did have another failed weekly breakdown, which was fantastic because that's a bullish sign for the market. But the thing is, how many times are you going to let the bears advance into your territory, bulls? You really need to step it up and actually get this chart moving to the upside, because this is not where we want to be. We do not want to be anywhere near this level. However, we are smack dab in the middle on the S&P. We're smack dab in the middle on the NASDAQ as well. Again, NASDAQ didn't have a weekly breakdown. It did rotate off its annual close at 511.23. So we're starting to build some structure to the bullish side. I'm definitely leaning more towards the bullish side, but let's talk about the levels that we need to look at for all these indexes, including the Russell if you guys play it. The Russell was one of more fascinating, kind of had a mix of the S&P and NASDAQ with a weekly breakdown rotation off its annual high or previous annual high, and then getting smack buck above the 50, but failing to hold it. So it's just kind of wrapping all the indexes into one lovely, beautiful index. I do still think the Russell is going to be the best play of the year, and I'm still standing by that assumption. However, it's taking some time. Again, January, February is not necessarily the most bullish time of the year. March, April, May, we do have that nice run that we go into, sell in May and go away, come back for Labor Day, where the summer is a little bit of a lull. But this year could be a little different. Maybe we're getting the lull period out. As we've seen the last 2 years, historically, timeframes have not necessarily favored everything. And we're kicking off with the beautiful word of tariffs. Tariffs. What a beautiful word that is. But let's see what the tariffs are going to do to the market, and let's dive into the S&P levels, exactly where we need. So let's dive into the S&P levels. Again, knowing where we want to be on the side of the trade is very, very important. I want to be bullish side to this trade for one simple reason. If we assume that we're going to open exactly where we are now, I only have approximately a 0.41% that I need to confirm that I'm wrong, versus the flip side, I need to be 1.24% up in order to confirm that I'm wrong to the downside. So very simply, that is simple 3-to-1 risk to reward ratio versus a 1-to-3. So again, I'm definitely going to take that 3-to-1 ratio, and also it could settle as a interesting entry opportunity around this 50-day moving average. I don't like to see the S&P retest the 50, considering we have been smacking it for the past 2 weeks. I really just want to see bullishness return to the market. I want to see bullishness as a resemblance of sanity. However, with tariffs coming out, we have to see how the market is necessarily going to react to that. How is everyone going to be trading it? Are we going to be basically slamming down 2% because tariffs get announced like we did previously, coming down to that weekly lower low? And then it becomes the question, okay, if we open in this 590 region, which is exactly where we want to necessarily be, right over here, are we going to buy the opportunity again? Are bulls going to step back in and buy the opportunity? Personally, I would wait and see if we open anywhere near 590. If we reclaim 590 on a closing basis, then open a bullish position, because pretty much that you have your set stop loss right at the weekly lower low. If it blows through it, okay, you managed your risk. Versus to the upside, as the bears have been basically trimming their short positions, kind of getting out while the getting is good, we can clearly see that we are above the 50-day moving average. You don't short the thing above the 50-day moving average. So again, I wouldn't necessarily be shorting even around 590, because a gap down traditionally for buying. So again, there's not a lot of bearish setups in the market. Now, what would be the bearish setup is closing below 590 on a daily basis, closing below 586. Then really the bottom can get blown out, right? If we look at this at that point from a larger time scale view, this is the low that we need to blow out, and simply closing below 586 confirms that we're most likely going to blow the low. That's a nice 3.6% trade to the downside. and your risk is managed because now your annual high is your new level for the stop loss, and you're entering around that so you can manage the trade relatively well in that region. Again, do I think that the market's going to shed approximately from where we are now another 6% after we failed to do it several times through tariffs and scares in this region? No. Why am I saying that? Let's just jump over to NVIDIA real quick. I want to show you guys a weekly pattern that was very fascinating to me, and that is a complete bullish engulfing candle on NVIDIA. We had a failed weekly breakdown, which is essentially the same. The previous week's close, we closed below, opened below it, pushed back up. So bears pushed us deeper into the red, and then we bought it back up. And then we subsequently blew through the entire week's range previously, closing, engulfing the previous week in a bullish candle. This is one of the most bearish candlesticks out there. As we're heading into NVIDIA earnings, I suspect NVIDIA could be back at 140 this week, especially with a bullish reaction in the rest of the market. I think Netflix and Meta, which I did close those positions on Friday because I wanted to kind of de-risk as the market was going into the weekend, especially as I heard with the tariff news and everything. I'm like, I don't want to hold this risk, and these have been pretty good positions for me. So I said, okay, I'm going to take some profit back from the market before I can give it back, and then reinforce some of the positions that I necessarily wasn't too sure, have cash on hand to roll them. So that's just the strategy that I'm employing this week. I may add into my index positions because I think, and I'll go over in the watch list this weekend, so make sure you guys are on the Discord. Hit me up on the Discord at one of the admins to add you to the group, so that way you guys can get access to it. I'm not necessarily going to go into full depth analysis on all the mega caps. I'll be in the watch list if you guys choose to join the group. But going back to the S&P, right, we're talking about exactly where we need to be. And subsequently, anywhere below the 50-day moving average, I'd be looking as buying opportunities. Staying above the 50-day moving average, breaking above 605, I'm definitely being a buyer there because then a blue sky breakout is looking like, depending on how we're going into CPI. So make sure you guys are subscribed to the channel to know exactly when that video is going to be coming out, where we're going to go over CPI play going into Tuesday. That video will be coming out on Tuesday at 4 o'clock, so you'll know exactly what to be setting up for that. So let's jump over to the NASDAQ to see exactly what it has to do. And subsequently, we can see that the NASDAQ is a similar story to the S&P. Again, same thing about the 50-day moving average. We don't want to necessarily close below it. We don't want to even be going anywhere, especially with tech's weakness recently with Google and Amazon selling off. NASDAQ could be weighted down this week, especially with those two. I do expect bearish continuation for them. However, like I pointed out with NVIDIA, it could definitely be one of those countervailing forces where people are going to sell Google on Amazon, buy NVIDIA, as NVIDIA has been beaten down significantly with the deep stake fiasco, as I call it. That's basically like, okay, we used AI NVIDIA chips to make it more efficient, so therefore NVIDIA not going to profit somehow. Again, they're the only game in town, but I could go on an NVIDIA rant for the next hour, and you guys aren't here for that. So let's talk about exactly what's going to happen with the NASDAQ. NASDAQ currently at 522, 50-day moving at 520. Similar risk to reward, even tighter on this from a bearish thesis. However, you got a bigger amount of no man's land heading from that 520 to 511, and that's where I'm establishing the lower low on a weekly basis, and also where I'd be looking at that bearish position, because again, the NASDAQ, similarly to the S&P, has a lot more room to run on the larger bearish side, 4.59%, not as much as the S&P, but it's also further away from all-time highs. So a mixed bag of rewards. NASDAQ probably one of those more catalyzed plays, because once this thing starts moving, this coil of energy that's been building right here definitely could push us higher with higher amount of accumulation. So again, what would be the buying strategy for this week? Well, let's simply talk about it here. Any touch of the 50-day moving average, I'd be a buyer with a tight 0.5% stop loss below, just because that's usually where we kind of find our ground around the 50-day moving average, as we've seen here and here. But simply put, pushing down back below to 511, that is what I would want to see. And again, 511, you don't want to necessarily be down there, but if we do get down there, we get bought back up. Another excellent buying opportunity. We have to see how the other indexes are going. Then pushing to 528, I'd be adding more positions because that was a rotationary point, and then looking for that 532 break, again, adding more positions as we are breaking through these levels, which is then confirmation. My risk reward is significantly greater and higher degree of confidence, so therefore I can stretch these positions out if I want to. Again, everything's going to be examples of these plays in the watch list, so make sure you guys are joining the Discord so you guys know exactly what is going on. And last but not least, let's talk about the good old Russell. The Russell this week actually went down to its annualized high, and that was going to be one of those really bullish plays if you caught this, right? I called it out on the weekend deep dive, and I also called it out on the watch list that the Russell could take a beating, especially with these tariff news. And I did put out something to you guys on the Discord about that. So beat down, pushed all the way back up to the 50, retesting it. Again, we've been bashing our heads on these 50-day moving averages for quite an amount of time. So this is definitely going to be one of those areas I'm going to be watching for on the Russell. Are we going to get above 228.72? Are we going to finally push back above that? Again, one of those plays that I really like with that coincides with the Russell is SCHD kind of having a discounted area around here in this tight zone between the two moving averages. So we really want to see the Russell, SCHD, and a lot of these small caps break out. So subsequently with the Russell, I would love to see maybe 523 as a buying opportunity that's coinciding with these areas of consolidation right here. And subsequently, if we just keep pushing on the Russell, great. Break above the 50, buy. Break above the 230, buy some more. And then where do we know we're wrong? For me, it's going to be 222.71 because that was the previous low that we established right here. It was also another rotationary point. And then I'm just saying, okay, there's no support between these two regions. So again, below 222 is where I'm going to be concerned that the Russell is going to completely break down. We would also see confirmation from the rest of the indexes breaking down as well. So that's going to be how I'm going to determine if I'm going to be bullish or bearish. Last but not least, let's talk about beautiful Bitcoin doing absolutely nothing. I did say for a while, guys, in the couple last week in deep dives, the Bitcoin just could go sideways consolidation after a big move. It historically does that. So anywhere accumulation below the 50-day moving average and 91,000 would be an interesting buying opportunity. And again, breaking below 88 would be a new established low where you're essentially saying, okay, well, maybe we're going back down to 75, and that was where you put your stop loss. Again, can't tell you much about Bitcoin just because it's been so extremely lackluster, because the market sentiment has extremely been lackluster. Both are tied, very correlated to one another. As people are more bullish, they get more into Bitcoin, versus if they're more risk adverse, as they are now, more cautious. I wouldn't say they're risk adverse, they're more cautious right now. Bitcoin's going to be in a stagnant position, but again, when this massive coil explodes, it's definitely going to launch Bitcoin significantly higher. And I love how everyone's like, a huge spike on VIX. I'm like, guys, this isn't a spike on VIX. We talked about it on the stream on Thursday when we were covering Amazon earnings. I said VIX is probably going to go down to 12 next or 20. It said, nah, I'm just going to be right here. So again, the market sentiment is like, because we've experienced tariffs before, we're not necessarily like, okay, that's nothing new. It's like, come on, guys, like, new playbook, please. Everyone's being cautious, but they're not like running out the door, right? They're thinking about it. So again, it's going to be one of those weeks that's going to be a very interesting week. And Fatal's going to give you guys the biggest winners and losers. You're probably going to see some sectors won, some sectors didn't win this week. And again, we're going to come back for the debate section of the video to talk about what the game plan is for this week, along with some of the threats we see in the market and just some fun banter about what we are expecting and what plays we're doing this week. So make sure you guys stay tuned for that. And Fatal's going to give you the biggest winners and losers now, and I'll be back in a second.
With the job reports that just released this week, as well as fear of tariffs, which is an ongoing thing, the S&P 500 gained 1.31% on the 5-day, and on the 1-day it actually lost around 0.9%. Overall though, if we take a look at this on the 1 month, we can see that it is up 0.65%. Moving forward now into the dividend hikes, there are a ton of them. Starting, of course, with Standard Motor Products hikes dividend by 6.9. International Bank Shares hikes dividend by 6.1. Magnolia Oil and Gas hikes dividend by 15.4%. First Business Financial Services hikes dividend by 16%. Next, we got ADM hikes dividend by 2% to 51 cents quarterly. This marks the 50th consecutive year of increases that ADM has done, making them a dividend king. We also have PepsiCo plans, actually they announced it, a 5% dividend hike this summer. And then dividend hike also makes it a point to say, remember they did a 7.1% hike in 2024 and a 10% hike in 2023, seeing that a lot of people were fairly disappointed with this 5% hike in Pepsi. Then we got Regeneron initiates an 88-cent per share quarterly dividend with a 0.5 yield. And looking at prior dividend kings, we got 3M will hike its dividend by 4.3%. 13%, marking the first year of increased dividends, only 65 more to go to get their previous record. They did cut and they lost their dividend king status. Then we also got a bunch of other companies. Now, if I already said them, I am so terribly sorry, but I'm just going to say them out as I see them right here. 3M hikes dividend by 4.3, XYL 11.1, PRU 3.8, OTTR 12.3, and POWL 0.9%. And in the Euro section, we got Novo Nordisk hikes that fiscal 2024 dividend by 21% to DKK 11 per share. Don't know what DKK is, but if you guys are from wherever the Novo is, then you guys know exactly what that means. Anyways, we got Train Technology hikes dividend by 12%. Old Dominion Freight Line hikes dividend by 7.7%. And here we have a few more. We got KMPR hikes dividend by 3.2. CSGS hikes by 6.7. MC by 8.3. AVG 2.9, RNR 2.6, UPS 0.6, REXR 3%, and NYT 38.5%. It just doesn't stop. We got CMS Energy hikes dividend by 5.3%. Yum Brands hikes dividend by 6%. Empower MPWR up 15% all-time high and a 25% dividend hike. We got EXPO hikes dividend by 7.1. Alpine Income Property Trust hikes dividend by 1.8. And WW Kellogg hikes dividend by 3%. Then we got IDCC hikes dividend by 33.3. As we saw, Yum Brands 6, Yum C, so YUAMC hikes by 50, ICE 6.7, CTSH 3.3, CME 8.7, CMS 5.3, MKTX 2.7, ELS 7.9, TW 20, and ITT of 10%. And we are almost done, but a few more to go. We got Allegion, I don't know how you say that, but hikes dividend by 6%. This is the 11th consecutive annual dividend increase. And the last one, which is actually from, once again, another European company, we got L'Oreal hikes dividend by 6.1% to €7 per share in 2025. The yield is 2% and the ex-dividend date is May 5th. Looking into now the S&P 500 heat map, we can see that there is a lot of red here, deep red. Starting with the technology sector, got the worst performer here being the company Skyworks Solution, losing almost 26%, and the best performer was Palantir, gaining 34.38%. Looking now into the consumer cyclicals, the worst performer was none other than the company Nike, losing 10.69%, and the best performer was Expedia, gaining 18.38%. Into now the consumer defensives, the worst performer here was the company Estée Lauder, losing 22.05%, and the best performer, well, Philip Morris, gaining 10.91%. Into now the financials, we got the worst performer being the company PayPal, losing 12.72%, and the best performer is the company AJG, gaining 6.79%. Looking at the communications, we got the worst performer being Google, losing 8.98%, and the best performer, it is the company Take-Two Interactive, gaining 12.54%. Looking now into the healthcare, the worst performer here was none other than the company Moderna, losing 17.3%. And the best performer, it is the company IDEX Laboratories, gaining 8.94%. Into now the industrials. Worst performer here, it is the company IDEX Corporation, losing 12.65%. And the best performer seems to be the company JCI, Johnson Controls Internationals, gaining 12.37%. REITs actually gained here a little bit for the first time in a while. The worst performer was the company Health Peak Properties, losing 3.87%. And the best performer, by the looks of it, seems to be, guys, this company over here, Camden Properties, gaining 4.79%. In the energy sector, the worst performer here was the company Diamondback Energy, losing 3.79%. And the best performer, it is none other than the company Marathon Petroleum, gaining 3.03%. Looking now into the utilities, the worst performer was the company Edison International, losing 7.24%, and the best performer seems to be none other than the company CMS, getting 4.09%. And lastly, in the basic materials, worst performer was it was that one, FMC Corp losing 38.08%, and the best performer, it is Freeport McMoran getting 6.61%. Looking now into this week's upcoming earnings, the biggest ones would definitely be on Monday, McDonald's. On Tuesday, we got Shopify, SMCI, oh boy, Coca-Cola, Humana, BP, and a lot more. Then on Wednesday, we got Reddit, CVS, Barrick, Generac, Biogen, Robinhood, and a lot more. Thursday, we got Coinbase. That's a big one. And then we also got Datadog, John Deere, Crocs, Sony, and Palo Alto, which is also another big one. And on Friday, we got Moderna, Enbridge, and Air Canada, and a lot more. So it'll be a really, really interesting week when it comes to this. And on top of that, I do believe that this week we also have the CPI coming out for the month of January. It'll be really, really interesting to see. So guys, that pretty much does it for this segment. With that said, take it away, Mike.
So I think CPI is the main thing for this week, considering that Powell's going to be kind of a nothing burger. We're going to see like the tariff news, obviously, as we have developments of that on Friday afternoon that we really didn't want to talk about.
But my guy, the tariff stuff is going to happen today at 6 o'clock, 6 p.m.
Yeah, we're going to find out the reaction.
The same day, by the way, which is ironically enough the same time that the Super Bowl starts.
Yeah. So that it's going to be fun, right? Everyone's going to be distracted by that. Markets are going to open up. We got the Trump interview today at 3 p.m. With Brett Baer from Fox. So that should be very, very interesting. But I do want to ask your question of you. Remember how we covered on the stream about egg prices, right? I know that's a contentious topic for all of us, especially because both of us like eggs and eat eggs every day.
5 to 6 a day. Yep.
So do you think CPI is going to be massively higher, massively lower, or smack dab in the middle?
So at least, I don't know about you, and granted, what I'm about to say is mainly for February, not so much for January, but we did see the escalation a little bit on oil prices in January. It started to escalate, but right now here in PA, gas prices are upwards of, I think the low end is $3.27. So I don't know how much it is where you are, but here's between $3.27,
about the same,
gasoline prices, and $3.35. The highest that I've seen so far.
Yeah, so gas prices actually, like, if we go to oil right here, going back to 2024, right? 2024, kind of same area. Honestly, oil could be a zero-sum game in this report because we saw an increase in January in last year. We saw kind of like a consolidation. Egg prices, obviously, not going to skew the whole food category as it's going, right? But then, again, AAA gas prices, I think it's standardized a little bit more now across the country, but it's going to be interesting. Let's see the gas prices, fuel prices. So basically, if we go here, we got the AAA gas prices currently for regular, right? Let me blow this up for all of you guys. 3.13 national average a year ago, 3.1. So again, essentially a wash on oil prices.
Yeah.
Was it negative the last report?
It was, yes. The energy segment of the CPI was slightly in negative. Not negative by a lot, but enough that it did skew the CPI a little bit lower.
So, my comment, like last time we covered the CPI report, I was saying like, because you're de-averaging the slope down where you're kind of leveling out, you're going to get a very like subdued reports probably for the next subsequent reports. And would you like to guess, previously it was 2.9 CPI. We have expectation for CPI actually, which is kind of ironic considering that usually they have been very lackluster in reporting this early on, right? So they're coming out and setting the expectations for CPI. They don't have core yet, but they do have the month over months. What do you think CPI came in at with the previous being 2.9? What are they expecting now?
The previous was 2.9. Oh man. Roughly the same. 2.9, 3?
All right. So originally you said it was going to be higher, but 2.9 on the dot.
Yeah, 2.93.
So basically a nothing burger, right? CPI is going to turn into this, like, I think, kind of nothing burger for a little bit because it's just going to be stagnant, I think. I don't think you're going to get these massive swings that everyone's predicting because the government isn't printing all this no influx of money is coming into the system. And there's an active thing to try to pull money back out of the system. And as we're seeing with the debt markets, right, if we go over to like, if you want to buy a house right now, Again, mortgage rates are in an interesting area, right? Not doing much since Donald Trump took office, right? Steadily heading down, even though we're seeing like fears of inflation coming back, fears of all this other stuff. So it's definitely going to be one of those very interesting trends that plays around for a little bit. But what do you think about that?
What, the fact that mortgage rates are somewhat not doing anything?
Yeah, like they're slowly going down with time, and
I don't think they're going down with time at all. I
let's take a
really
look.
do. I know that they said that that they want to tackle the 10-year treasury because that will essentially bring down mortgage rates. But I personally think that it's not going to come down at all right now because the Fed's basically hell bent on keeping rates where they are. In fact, I would actually argue that the new this current interest rate of I think what 4.25% to 4.5%, I think is where we're at. I forget.
So
where
right
we're
now,
at.
December was 6.7 again. We got flat really.
Right.
I believe we're like sitting at 6.5 right now. So a quarter point, really not. It's not doing much, but also it's like a battle of what do we fear most, right? As like I love this thing. I just gotta say I love this thing. The Doge clock. That's the greatest invention of all times. It's huge. I love this. I can't get over it. But it's going to be very, very interesting because 75 billion just by tackling a couple stupid things versus when we get to the big kahunas like the DoD, Department of Education, the IRS, I think that number is going to go steadily exponential, like Nvidia stock.
Silly into the trillions of dollars, I guess you could say.
Yeah. I think you're going to start tacking on ones and twos in the front of this thing really, really quick once you start getting into those like bigger, beefier organizations, especially DoD. We all know there's these defense contractors get a lot of money from defense contracts. And if we've seen the USAID, I can never pronounce that right. How they were just like cutting checks left and right. This is going to be a prime example of the DoD, which is extreme. Like, right, we're spending on defense and war $879 billion. So there's got to be bloat.
Meanwhile, the spending on the interest on the debt is $1 trillion.
Yeah, we spend more. It's going to surpass Social Security in a couple months.
Probably.
Yeah, so it's just insane.
But the main thing that we have to take a look at in regards to this is how is the Fed going to react with the government spending, especially if they actually do try to take away the income tax, because the way that the Fed sees it is, of course, that they believe in MMT. Yeah. So the way that they see it is just like, oh, people have more money. Oh no, inflation. When in reality, that's not how that works, right?
But do you think the Fed's kind of taken with everything, they throw it into this bucket of we're going to see how the data comes out approach where they have their opinion, but like I feel like every time Powell's found this like magical thing, get out of jail free card of we're going to be data dependent and just doesn't answer the question.
So you want to know my honest opinion? I honestly believe that the Fed, Jerome Powell, is going to go, he's going to become very aggressive if Donald Trump and the Republicans actually manage to nuke the income tax.
Okay. I
have a feeling they're going to become very aggressive. Not in the sense that they're going to start raising or cutting interest rates or anything like that, but I think Jerome Powell has a vendetta against the current president. And if he does manage to do that, he is going to go all out nuclear. He's going to start just interest rates hiking up nonstop. It'll be insane. It will be insane.
Yeah, but we'll have to see, right? Because like a lot of people had a lot of theories about Powell, about how things were going to turn out. I disagree. I think he's just going to sit in quietly as long as the data doesn't show anything. And
I don't think so.
We'll see, right? We'll see if they achieve that, right? There's a long road ahead of trying to get there. First, I think lower government spending is like priority number one, because like that's easier. That's easier than trying to deal with all the constitutionalists and all that and trying to reinvent the wheel. But he's going to still try and reinvent the wheel with the beautiful word. It's going to be the beautiful word, tariffs.
Yeah.
Donald Trump basically trying to push more tariffs. As we saw, there was an update late on Friday. Trump revised his decision to eliminate a diminish loophole that allowed packages for China valued at under 800 to be processed without customer duties or tariffs. Boon for retailers like Shen and Teu. Through the orders, said Trump will get rid of the loophole again once the U.S. Commercial Secretary establishes a system to fully and expeditiously process and collect tariff revenue. So basically what he's saying to a certain country over here is that you're no longer going to have this loophole. On top of, we're going to impose reciprocal tariffs on basically tomorrow or tonight when this all comes out. So it's going to be very, very interesting to see how this all plays out.
I agree. And we'll see. So in regards to the whole tariff thing, I actually don't think the numbers add up that tariffs can supplement entirely the current income or the current revenue of the federal government. If that's his intentions, obviously, if the government wants to keep the exact same amount of spending, then that's not going to happen. So tariffs alone cannot do that.
Yeah, I don't think, going back to debt clock, because it actually has it here. Where is it? Tariff tax revenue,
that's
versus the income.
Billion.
It's like you got to go along now. Get rid of the government spending. Yeah, maybe you can do that, right? Minimize the size of government, get rid of a lot of these things that they're finding wasteful if these organizations are showing up as already an indication of it, right?
Right. But it'll be interesting to see how CPI actually affects any decision, especially the decision in March for the FOMC.
Which actually, take a look at what that's sitting at right now, right? So the March right now, obviously, is going to be like no rate cut in March.
No cut, yeah.
But again, how the data plays
how are things
out.
going to switch? Right.
Yeah.
And then on top of that, we also have a ton of earnings as well this week. And I cover this on my part. The big ones definitely be SMCI, Coca-Cola, McDonald's,
Shop.
What's it called? Crocs. What else is there?
Shopify.
CVS Health, Generac, Roku, Moderna. All of these guys are. I think that Monday, Tuesday, Wednesday are going to be the big ones, and the other ones Thursday, sure, Friday. But I think the big ones are going to be on the. It
kind of ramps. The news ramps into Wednesday. You got Jerome on Tuesday, Jerome on Wednesday, CPI on Wednesday, PPI on Thursday. But that's going to be like an aftermath. You got Shop, McDonald's, like you said. Vertiv is another one that's like a infrastructure side for AI. So they are definitely going to be one of those like big hot ones that we may actually talk about or may do a video on because they're local to South Carolina here. So kind of an interesting company. I always keep an eye on them. You got Robinhood even with Hood. So that's going to be another interesting one, especially seeing how like they're doing different things. Cisco, right?
John Deere, that one's going to be an interesting one as well with the tariffs. And also Applied Materials too, because they I think that they also have something to do with chips as well.
Yeah, so we got Roku as well, right? So there's like the smaller lesson. You got Magna. I know Ghost or someone talks about that a lot. For
Palo Alto.
Yeah, so you got a slew of them coming out this week. It's not one of the big headline market movers, but definitely for those individual stocks, it's going to be a big play this week. And last but not least, sir, what do you think the fear and greed is going to be at next week?
Well, I know that for a fact we're still at fear.
Yeah, we got nowhere. Last week was 40, right now 39.
We may stay at fear, honestly.
You think?
We may stay at fear. Yeah,
I think we've been here a little too. Well, I said that last week, right? We've been in fear for quite some time right here. I think we need a pop similar to how we were here, right? We dipped into like the extreme fear territory, and then we spent about like a month in this area, and then subsequently in December we were in fear, and we spent almost 2-3 months in this area. So we really need a pop on this sentiment, just for a brief moment at least, right? To kind of, but again, with tariffs coming on deck, how is it all going to play out?
And by the way, guys, just because markets may go down, because markets are most likely going to go down with the whole China tariff stuff. Guys, it's a great buying opportunity. It's a great buying opportunity. If you see a stock that you've been wanting to buy, for example, Google, that one's one that has gone up so much. Now, able to buy it again at I wouldn't say a pretty good valuation compared to what it was like a few years ago, but it is still a little bit cheaper than what it was just a few days ago, right? A few weeks ago. So take advantage of the downturns. Just because something is happening doesn't mean that it's going to be the end of the world. It will recover. It will 100% recover. As long as the fundamentals, but I have to give this caveat, as long as their fundamentals are okay.
Yeah, similar to like Amazon, right? You're getting a discount, you're getting it cheaper than you got it last week. Nvidia as well, right? Kind of in this area of like full bullish engulfing candle, like I mentioned. You're getting cheaper prices on these stocks that you couldn't have before, right? Everyone, like when Nvidia was 132, it was like, oh, I would love to buy it really cheap. Then 90 came around, right? And then look what it did subsequently, went more expensive. Right now, everyone was saying the same thing. Oh, I wish I wanted cheaper. Well, here's your buying opportunity, and you still can get in, even though it's been pushing pretty hard. I think Nvidia's earnings is going to be one of those epic. We could see $1 trillion added to its market cap in a day.
Wow!
The same way you lost 600 billion, you can short squeeze your way to $1 trillion.
I guess, but we'll see about that. But I think that'll pretty much do it for this video, right, Mike?
Yep. Thank you all guys so much for watching. We'll have the latest video posted up here if you guys want to check that one out. Make sure you join the Discord and at one of the admins to be added to the watch list, where we're giving you guys out trade ideas along with option plays in there, and then you can ask us questions directly about those certain plays. So make sure you guys join that as well. And make sure you guys are subscribed and like the video as well. It really helps YouTube algorithm out and knows when we're going live to cover some of these earnings, CPI, and news events. So make sure you guys are subscribed. So thank you so much for watching, and we'll see you guys in the next one.